Good morning. Paul Georgie from Allendale. It's September 1st, 2011, Thursday morning. We've got the USD export sales out. Corn looking for old crop to be a negative 50 to maybe a positive 150. Came in at negative 321. New crop 200 to 800 was a range of expectations. Came in at 957. So we'd kind of expect there that some of the old crop business had been rolled into the new crop. And in soybeans, trade was looking for 300 to 700. Came in at 593. In the wheat, 350 to 600 was the estimate there for exports, and it came in at 369. So it was on the lower end of expectations. We did have some news that Taiwan has purchased 60,000 tons of Brazilian beans. We also have news out of the Ukraine that the Ukraine business body is talking and hoping that the government gets rid of the export tariff that they've got on grains being shipped out. So if that would occur, that would certainly open up a lot more business and a lot more grain coming out of that Ukraine and FSU area, and could put some pressure on our wheat prices as we move forward. The deliveries also last night, we had deliveries in soybeans, 264 contracts through August 16th. Wheat had another round of large deliveries, 1195, and that was all the way through August 31st. So would expect some more spread adjusting here, and especially in that September contract rolling out into the December contract would be something that we'd be looking for here today. Just give you a few comments from the Farm Progress Show, which was at yesterday, presented on a panel there for the University of Illinois, WIL Radio, and the consensus that I got from talking to producers and other analysts, there is no doubt everybody is bullish, and we're hearing words like can't. This market just can't go down, can it? And I think that concerns me a little bit. Also talking to many people about the percentage sold by producers. They're suggesting that anywhere from 10 to 30% of 2011 crop is sold. Doesn't seem like very much. And also hearing some yield reports down there. One producer had harvested about 80 acres and was expecting a lot less yield than he got. Actually, it came out 30 to 40 bushel an acre more than what he was expecting. So that is a surprise. But then I've got customers and producers we've talked to over in Indiana. Their yields actually were less than what they did field checks on, anywhere from 10 to 15 bushel less. So what it tells me is that we still have got a lot of ground to cover here. We're not going to know exactly what kind of crop we got until we have the harvest underway, until we get the combines running. And maybe we won't even get a true number until we truly get done harvesting, because the later planted corn has still got a lot of potential if we can get some rain here in the next next week. So as time goes by, the corn is not going to be helped very much by rain. Soybeans, however, the opportunity is still there. Talking to producers from around the state, expecting soybeans to continue to have that potential to be a good crop yet if they get some rain. However, the time is narrowing there as well. So we still are talking about yield. Yield was definitely the things that producers wanted to talk about yesterday. How big a corn crop do we really have? How big a soybean crop? But I think that spin on the yield is winding down. As we get into harvest here, we're going to be worried about demand, because we are seeing some demand slow down. We've seen that this morning in export sales. They're running way behind a year ago and where we should be in order to meet the USDA's projected sales here for the coming year. We also are seeing continued feed demand deteriorate with, especially in the poultry industry, where we get reports very often, and that is the egg sets are continuing to be less, 8% less, and chicks that are being placed are 4 to 5% less. So we're seeing some definite reduction in demand at current price levels. In the livestock, cutout values there is something that we've been watching closely here for the last few days. We had extremely sharp breaks there. Beef cutouts, for instance, choice down 178, select down another $1.70. Pork, we're seeing $1.55 lower on cutouts. And what that's telling us is that we're at a time of year where this post-Labor Day holiday kind of signals the end of summer, the end of the high-priced cookout meats, the primal cuts, and therefore cutout values get tighter, and the packers are less willing to pay up for these livestock. So expect some weakness in the livestock here as we go into the holiday and post-holiday. Cattle, however, we're looking at better prices as we look forward into the first quarter of 2012. So we have a little valley to go through here, we believe, in the livestock numbers. So something to watch very closely and look for opportunities there, and stay tuned to Allendale's research. We'd be happy to help you out and guide you through that time. We also want to remind everybody that we've got 2 days left for the Allendale yield survey. We appreciate everybody that's already filled out the survey online or called us. If you haven't yet, please do so. You can get it on the web at allendale-inc.com. Just click on there, fill out the survey, and we'd be very thankful, because you know your fields better than any of us do, and anybody driving up and down the road. So that help would be appreciated. We'll give you those results next week, and it'll be long before the USDA report. So we wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.